Hi, and welcome again to another edition of Market Analysis for today, April 12th, 2024. I'm Giovanni Bencourt, analyst, trader, and educator with Vantage Markets. And well, we had a nice volatile week indeed. The news dropped this week that the Federal Reserve may deliver fewer interest rate cuts than hoped, and maybe none at all. That sent a shockwave through markets, but one of the biggest impacts is still being digested. It's true that higher for longer borrowing costs will make financing for companies more expensive, possibly denting earnings, and will keep mortgage rates higher for consumers as well, meaning they have less to spend on goods and services. The idea that the Fed won't cut much didn't just surprise people across the globe, but it put central banks across the rest of the world on the back foot also. For the past few years, most countries in the world have had similar problems. The COVID-19 pandemic, then faster inflation. That means interest rates across the globe have moved more or less in step with each other. That in turn kept currencies broadly stable against each other. But things are changing. The European Central Bank signaled yesterday that it's still ready to start cutting rates in June. Switzerland has already started easing in Europe, while China and Japan are also worried about bolstering fragile growth. The net effect is that the dollar gets stronger. And that's basically what we've been seeing this week. This is already coming to a head in Japan, where officials are warning they may have to act to stop the yen weakening too much. Now, expect world leaders meeting in Washington at the International Monetary Fund next week to discuss currencies a whole lot. Now, gold and silver are also feeling the impact. Gold's recent rally to new records, 2,400, which it was projected by the beginning of the week, isn't primarily being driven by investors hedging against inflation or preparing for a downturn. It's central banks, particularly China, looking to shore up their reserves. Silver is also gaining favor. In short, the consequences of the new outlook for the Fed rates are bigger than just the stock market, which thankfully seems to be doing all right at the moment on the cusp of earnings season, which begins today with JP Morgan beating expectations, Wells Fargo not so much. This obviously also opens up a new opportunities for all these savvy investors. With that being said, let's take a look at what we can expect for today's fluctuation in the markets. We've seen that before the bell opens in New York, we've seen a pullback, a retracement on the indices after having such a nice rally to the upside yesterday. The Nasdaq rebounded off that three floor level that we placed yesterday, around 18,000. So it really just took a parabolic movement to the upside, just passing through all the medium and the moving averages. Today we see that the Nasdaq has retraced, done a little bit of a give some money back, and we've seen that perhaps this is just a head fake, and a continuation to the upside can be also applied. 18,500 was that resistance level that we had throughout the week. We continue to see that being met. We haven't broken that or violated that particular level. So let's see if today will be different. As far as for the S&P 500 goes, we are within yesterday's range, inside the Bollinger Bands. The level of 5,170 was nicely met yesterday, rebounded off that low. Looking for more participants in the market, RSI is further away from being overbought, so we can contemplate a move to the upside in the S&P 500. The Dow, however, is still shaking off a lot of its sell-off that it has had for the past few weeks. So let's see if if it'll be in balance today, the RSI is further into closer to being oversold rather than overbought. So that could probably continue to not just to edge lower to our support of 38,400. As far as for crude oil goes, crude oil is making a perfect setup for a breakout, making equal highs, equal lows. Right now, we actually are basically within yesterday's range throughout the entire week's range. So it's just sitting there waiting for news. Will Iran retaliate and attack Israel directly? That is what a lot of people are expecting. We saw that Biden came out and said they're going to support Israel if Iran decides to do so. If that happens, $90 can be met really quick. Okay, so keep that in mind. As far as nat gas, we did see that nat gas yesterday had, throughout the week actually, we had the 190 as our resistance. It came shy of our resistance, about just 20 cents, or actually 12 cents per se, and it retreated. It has retreated, done a pullback, a strong pullback, and that pullback yesterday was also continued. It met the 170 support level, and this is where the market has created a double bottom and is looking to bounce off that lower bottom, or that double bottom, towards the 175 marker. It is the weekend, so I wouldn't expect, unless something radical happens, for much movement to be done in nat gas. Gold, all right, so 2400 has been met. We did call that out at the beginning of the week of 2400 yesterday. It seemed that it would have been more of a complication to have been met, but it has been met, 2400. I wouldn't expect much more movement to the upside, unless obviously we hear Iran doing something against Israel. I have my resistance at 24.25. But a nice pullback from here can also be anticipated. Then we have silver. Also, silver is taking a nice rally to the upside. Now, will silver and gold start walking the upper Bollinger Band again? That could also be happening. But again, it's Friday, so keep that in mind. Copper also did a breakout. It had been doing basically the same the same highs and the same lows, and have actually just broken out of that double top that has been created throughout the week. Towards the $4.35 is where I have my resistance. So stay long with copper. Then Bitcoin. Bitcoin is just really sitting there again, creating just sideways movement, lateral movement, horizontal movement, if you will, and just consolidation. Looking for a breakout to the upside, about 72,000. The currencies are taking a beat. We see that the euro has broken that 107 support level that we had previously set for it. Now we're looking to trade towards the 106 handle and see if that will be met today. The pound also looking for 124.5. Let's see if it'll find some footing around that area, and that's because the dollar index has strength very, very well. So let's see if 106 will be that resistance level for it today, as we see that the dollar index continues to move higher towards our resistance level. We might be seeing that obviously we're entering the overbought territory, the RSI. So therefore, this area between 105,600 and 106 can also be dialected into the metals and the currencies. That's it for today. Have a great weekend, and I'll see you Monday.